Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. Welcome to Thursday, the 1st of December, 2022. 22 trading days left in the year, kids. And they could be good ones. Let's talk about that. So, as you know, Powell came out yesterday, gave his speech. It didn't give any lip service to a Fed funds rate materially above 5%. I think that's important because we did have some talk earlier this month about seeing potential Fed funds up to 7. I mean, the market wasn't going to like that. If Powell started saying that stuff, well, we're down 1,000 on the Dow. So didn't say that at all. Talked about the need to decrease the magnitude of rate increases, what have you, potentially starting in December. So 50 bips looks like it's on the table in December for now. And actually, Fed Fund futures are indicating a sub 5% terminal rate, which I thought was interesting. Now, the dollar, I have it up here on the chart, UUP. The dollar started going down really as soon as Powell started giving his speech. This is the most important thing as far as I'm concerned. You look at today, this is the UUP, indicated down another percent, 28.33. We're going to open up right around here, getting real close to that 200-day moving average on here. I think the DXY might actually be violating its 200-day to the downside. I'm not totally sure. I can't get that on my stuff. But at any rate, dollar down. And then in turn, I present to you commodities. Gold up 2.5% this morning. These are all up yesterday too. Silver up 3, copper up 50 bips. WTI is up 2, nat gas up 3. The TLT up 1.5. Long treasuries bid. Just a great day for commodities. Near-term risk on. We just got PCA data this morning. Came in a little bit softer than expected. 20 bips versus 30. Now, looking out longer, are earnings estimates for 23 still at risk? Absolutely. Are they still too high? Yes. Still chance of recession? Sure. I'm actually working on my newsletter right now, pointing out the dichotomy we're seeing out there in terms of that potential recession in 2023. But the exercise for 23 may not matter for the next couple of weeks. It looks like a relative, be careful when you say things like this, but it looks like a relative free pass till 12/14. That's the next Fed meeting. It's just, given the crappy performance out there, given underinvestment, all that stuff, it feels like animal spirits will probably take hold over the near term. If it screams too hard, too much, whatever, we're up like 8% from now till 12/14. Powell might have an entirely different tone at that meeting, and that might be a different environment for the last 2 weeks of the year. We'll see. Long duration assets, they've been repressed and suffered the most. They had the biggest gain yesterday. We look at the XLK. You could do this a lot of ways, obviously. Look at that huge move yesterday. Volume, decent volume, better volume on that day. But you can see here we're getting real close to that 200-day. We're probably going to maybe bump our head up against it today. And then next week, I wouldn't be surprised to see a breakthrough. My favorite way to play the current environment, though, is still the commodity route. You benefit 2 ways. One, you get the cyclicality of recovery and risk on. So they check that box. But they also check the box of inflationary assets. So still in a high inflation environment, commodities they check both those boxes. Weak dollar, good for commodities. Inflation, good for commodities. So if you look at OIH, oil service, I like that space a lot. The big guys in there, you guys all know them. Halliburton, all these have good looking charts. You got Big Hal, you got the 50-day about to come up through the 200. You look at smaller ones like a Neighbors. You got the 50-day coming up over the 200 right now today. Just did some consolidating, looking like it might want to resume the uptrend. And if you look at small E&P, it's hard to, I don't really want to do a lot of names there, but XOP, that's just E&P in general. Good looking chart. You look like an Antero Resources, that's a pretty small E&P, not paying a dividend. Huge consolidation. Maybe that makes a final move and a break to the upside. We own AR in disclosure. And what else did I want to talk about? Small caps, IWM, big day yesterday. Again, you get that you get two favorable things here. They're cheaper than the large caps in terms of valuation. You also get the cyclicality move, right? Small caps are the first to recover, and they have the biggest move in that sort of an environment. I'm not saying that's where we are. I'm saying it's going to look like that for the next couple of weeks potentially. Small caps look great, even semis. I'm laughing because I'm really not there that much. Normally I catch this. Normally I'm there big time for the semi move, but it's just gone. It's just train has left the station. Doesn't mean you can't hop aboard for another 10% or what have you in your term. SMH breaking out. Again, you've heard me say it. My favorite way to do it, if you are so inclined, is semi-capital, KLA. And I think it's going to be flat on the year here pretty soon. You look at Lam Research. All these are much improved looking charts. Even like an AMAT will work here. AMAT looks good. AXML, looks great. So all those probably work over the near term. And I think that's all I wanted to talk about. Copper, we own the COPX. We bought more yesterday. Probably buy more on a consolidation. Looks like we might pull back a little bit this morning. But copper miners like that. Gold miners, as I've talked about, we own the juniors, the GDXJ. That'd be real nice to see that break above the 200-day. Anglo Eagle Mines, that's a high quality, larger cap. Gold, look, it's up 2.3% the pre-market today, above its 200-day. It pays a dividend. Another nice way to play along with gold if you are so inclined. That is it. Put the message probably till 12:14. Very favorable risk on type of environment. Enjoy. Be careful. Have a great couple of weeks. See you tomorrow.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility,